Good morning.
Like he said, most of the important things in the world have been accomplished by people who have kept on trying when there seemed to be no hope at all. Arise, champion.
Perseverance transforms average, everyday people into world champions. So the key to victory, the key to success is never giving up. And in order for you to do that, rise, champion, you're gonna need a strong why to prevail, a strong reason to keep going. You see, the more difficult your obstacles are to overcome, the more you must keep your reasons for succeeding in front of you. Vince Lombardi said, the difference between a successful person and others is not a lack of strength, not a lack of knowledge, but a lack of will. Success is not about how you look on the outside. Rise, champion. You might look like a Lamborghini, mean and clean, everywhere you go. But see, I'm interested in what's under the hood, because that's what really matters. When life hits you with that brick, and you get knocked down on that mat, and I'm talking to the Linda Rouseys of the world, the ones that have been knocked down once and twice, and everybody out there is calling you a failure, everybody out there saying it's over. What are you gonna do? Rise, champion. I don't even think they should be able to call you a champion until you've been beat. Because even losers keep going when they're winning. But when you get hit with that brick and you on that mat on your back, rise, champion. Then we separate the cream from the crop. Only when you're down 25 points on the biggest stage like Tom Brady, and you come back and we call you the greatest of all time. Abraham Lincoln said, I am not concerned that you have fallen. I am concerned that you arise. Champions make adjustments, not excuses. Get up! The ground, the mat, being on your back is no place for a champion. Get up! Arise, champion. Now you at that crossroads. The decision you make now will ultimately define your legacy. I'm speaking to the Tiger Woods of the world. Each loss, each setback, each heartbreaking disappointment will try to disguise itself as failure, but it's all a lie. And let us not grow weary of doing good, for in due season we shall reap if we do not give up. Many times on the road to success, you're gonna feel crushed, exhausted, and alone. See, life is not like Little League. Arise, champion. They don't give away participation trophies. There's the champions and everybody else. It's one or the other. How do you want to be remembered? Each time life knocks you down, arise, champion, you must bounce back with an even greater hunger to succeed. The ones that have the hardest time doing this are the ones that have weak whys. Now you can only go as far in life as your why will carry you. Champions have self-awareness. They know why they want what they want, and that why carries them to the promised land. The why is the birthplace of all champions. She is the mother to all legends and all the greats in every field. The more deeply you are connected to the thing you're trying to accomplish, the more likely you are to achieve it. Natural talent and ability, that's all good, but it won't carry a quitter. So you gotta find a why that makes you invincible, that you can run through walls with it. Get up! Nietzsche said, he who has a why to live for can bear almost anyhow. And I'm not ignoring what you're going through. Get up! And I'm not gonna sit here and lie to you and tell you this gonna be easy, cause it's not. It's gonna be a struggle. You're gonna have to fight and claw and scrape your way up out of this thing. But you can do it if you want to do it. Now, are you a pretender or are you a champion? You can't have a testimony without first having a test. The whole world is watching you right now. Get up to see how you respond. Show them what you made of. Never give up. Dale Carnegie said, most of the important things in the world have been accomplished by people who have kept on trying when there seemed to be no hope at all. Arise, champion. Now perseverance transforms average, everyday people into world champions. So the key to victory, the key to success is never giving up. And in order for you to do that, rise champion, you're gonna need a strong why to prevail, a strong reason to keep going. You see, the more difficult your obstacles are to overcome, the more you must keep your reasons for succeeding in front of you. Vince Lombardi said, the difference between a successful person and others is not a lack of strength, not a lack of knowledge, but a lack of will. Success is not about how you look on the outside. Rise champion. You might look like a Lamborghini, mean and clean, everywhere you go. But see, I'm interested in what's under the hood, cause that's what really matters. When life hits you with that brick, and you get knocked down on that mat, and I'm talking to the Linda Rouseys of the world, the ones that been knocked down once and twice, and everybody out there is calling you a failure, everybody out there saying it's over, what are you gonna do? Rise champion. I don't even think they should be able to call you a champion until you've been beat, because even losers keep going when they're winning. But when you get hit with that brick and you on that mat on your back, rise champion. Then we separate the cream from the crop. Only when you're down 25 points on the biggest stage like Tom Brady, and you come back can we call you the greatest of all time. Abraham Lincoln said, I am not concerned that you have fallen. I am concerned that you arise. Champions make adjustments, not excuses. Get up! The ground, the mat, being on your back is no place for a champion. Get up! Rise, champion. Now you at that crossroads. The decision you make now will ultimately define your legacy. I'm speaking to the Tiger Woods of the world. Each loss, each setback, each heartbreaking disappointment will try to disguise itself as failure, but it's all a lie. And let us not grow weary of doing good, for in due season we shall reap if we do not give up. Many times on the road to success, you're gonna feel crushed, exhausted, and alone. See, life is not like Little League, a rise champion. They don't give away participation trophies. There's the champions and everybody else. It's one or the other. How do you want to be remembered? Each time life knocks you down, rise champion, you must bounce back with an even greater hunger to succeed. The ones that have the hardest time doing this are the ones that have weak whys. Now you can only go as far in life as your why will carry you. Champions have self-awareness. They know why they want what they want, and that why carries them to the promised land. The why is the birthplace of all champions. She is the mother to all legends and all the greats in every field. The more deeply you are connected to the thing you're trying to accomplish, the more likely you are to achieve it. Natural talent and ability, that's all good, but it won't carry a quitter. So you gotta find a why that makes you invincible, that you can run through walls with it. Get up! Nietzsche said, he who has a why to live for can bear almost anyhow. And I'm not ignoring what you're going through. Get up! And I'm not gonna sit here and lie to you and tell you it's gonna be easy, cause it's not. It's gonna be a struggle. You're gonna have to fight and claw and scrape your way up out of this thing. But you can do it if you wanna do it. Now, are you a pretender or are you a champion? You can't have a testimony without first having a test. The whole world is watching you right now. Get up to see how you respond. Show them what you made of. Never give up.
Good morning, good morning, good morning. Happy New Year.
Good morning. Happy New Year.
Happy New Year.
Good morning.
Good morning. I'm ready.
Good morning. Happy New Year.
Good morning. Morning. Happy New Year. I got my shirt on, establishing it from the jump. It's not an option.
I need that. I'm ready. Let's go.
Already. It's been a good break, but I'm ready to go. I'm ready to go. I've been in the lab, really just mentally trying to prepare myself for this year. Doing a lot of praying, a lot of back testing, a lot of just, man, it's about to be fun. And I'm excited. I think we got everything we need to finish this year strong, to start to the whole nine. So I'm excited. Glad you guys were able to jump on for our first training of the year. Today I'm gonna go from the top with optimal reversal. Go through that, and then we're gonna jump into Underground Railroad. Won't have anybody teach today, but next week people are open to that, and of course, questions and things like that. Right off the bat, just real quick, how was everybody's Christmas, holidays? How's been your experience on the charts? We actually had it was almost like Christmas to the Forex traders because the market kept moving more than normal. If you guys have been around trading long enough, you know that it didn't have this much movement in previous years. So how was everything? While I get everything set up, anyone can jump on and start.
You know what, Chuck? I did notice that. I was waiting for it to be really, really slow. You've mentioned this, Sam, kept mentioning. And so, I was just jump on there and see that there was some good moves. There was some good things. Definitely. I didn't take any trades, but I was just, testing what you had been teaching us. I sent you, those screenshots, and yeah, all through December, I kept testing it, and I just was like, wow, and was afraid to really take any trades. You know what? I take that back. I don't want to use the word afraid. I just wasn't sure. Waiting for how you guys were saying that the market kind of gets a little cray-cray. But the strategy, man, still worked for sure.
That is true, Stella. That is true. I remember because I didn't trade a lot. I kind of shut down maybe a week or so before Christmas and stuff. And I just remember just thinking throughout each of those nights when I just look at the market and I turn over to Yvonne, I'm like, it worked again. And I wasn't in it. So it took a lot of discipline and patience, but hold the phone. Everyone stop for a minute. Mr. Millionaire is in the house, Mr. DeAndre Hagler. I just got to give a shout out to my guy. Oh man. Saturday morning training, I feel like Christmas over again.
What's going on, everybody?
Good morning.
Good morning, sir. Good to see you.
Good to see everybody.
What up, D?
What up?
Oh man, good morning, Alicia. Oh man, we about to do this thing.
Good morning, Chad.
Good morning. But yeah, I was really excited to just really see the market just give us our setup, the setup that we've been focused on. So that was really cool. But let me go ahead. Again, I'm going to start from optimal reversal and take it from there, and then move into Underground Railroad. Of course, if you guys got any questions along the way, please stop me. But I'm going to go ahead and get started. Let me share my screen. Anybody been doing their homework?
I'm not gonna lie, Chuck Jones, I did not, do it on the spreadsheet, but, I have my notebook with my dates. Mostly I've been doing GJ, with my data. So for sure, just like I said, just following it. But in terms of back testing, I did not do it. And I have not put it on the spreadsheet.
It's all good. It's all good. You're not alone. I'm not sure who has done it. I haven't heard any reports back. But I'm going to tell you guys this. It helps. It helps train your mind to see it, to believe it. I told one individual, I said, do the homework for this reason, that you leave convinced that this works or convinced that this does not work. That's the only thing you should walk away with, confidence that this either works or it does not work. And that's what the homework will do. It's going to help to solve the head game of, am I doing what I should be doing? Is this a waste of time? Is this even work? That homework's going to really change it, all that. So I'm going to do another pitch today to try to get people to do the homework. Hopefully by the end, you'll see the value. Optimal reversal strategy is the initial reason why we had this call in the first place. In the beginning, I didn't have Underground Railroad that kind of developed throughout the year. Optimal reversal, the reason why this call kind of came together is because this was, and still is, one of the ways that we qualified our trades, okay? One of the ways that we qualified our trades, entries, right? Our ability to get in the market. Any move that is pretty significant on the market, you'll be able to see the optimal reversal could have got you in the move, okay? Unless it's something like news that just makes the move take off, right? But even sometimes then, optimal reversal is a lot of times, and if you guys don't realize, fundamentals at times, or many times, oftentimes is actually in agreement with the technicals, right? A lot of times the technicals, if you actually do good technicals, will give you a clue to what the fundamentals will do. In many cases, there's also other cases where just stuff just happens, right? But in general, optimal reversal can be applied to any type of entry we're talking about. We can talk about qualifying a trade off of if you're zone trading, if you're doing fib trading, if you're doing harmonic pattern trading, if you're any level where we have a legitimate area for actual for trading an opportunity, optimal reversal can be used to qualify, right? So I just wanted to set that up. Optimal reversal is designed to do two things. It's designed, number one, and for those whenever you teach this, you want to be able to talk about what these things are that it's designed to do. It's designed to be able to do two things. Number one, to be able to help us catch the major reversal. And number two, it's designed to be able to help us catch the continuation. Okay, the continuation after a pullback. All right, now what do I mean by that? Well, one of the things that's really important for us to understand when we are talking about optimal reversal and even talking about trading in general is that the market, we know this by now, it doesn't move in a straight line. It never just moves in a straight line altogether, right? What it does though is it moves in what we have learned, Elliott waves. Okay, this is an Elliott wave. Moves in this type of fashion where you have an impulse, right? Impulsive move. You have a correction or a pullback, impulsive move, correction or pullback, impulsive move. All right, generally it's going to be this 5-wave pattern, right? It's really 3 waves, but it's this this wave pattern, this 3-way, 5-way pattern, depending on who you're talking to. And so understanding that the market doesn't move in a straight line is really the core of really understanding how to utilize this. Now, you see this 0 all the way up to 5. This is a complete move. The market's been going really in one direction the whole time. When we talk about optimal reversal designed to catch the major reversal, well, that's exactly what we're talking about. The market's been moving in one direction. Optimal reversal can get us in there to catch the retracement or to catch the reversal of this major move, okay? So that's the first thing that it could do. It's been moving in one direction. It could get us in there at the beginning to catch the other change of direction. To catch the continuation, this is what we're talking about here. We have an impulse correction. Optimal reversal could get us in here to catch that continuation move, or get us in here to catch the continuation move. Okay, it's a continuation of a move. Anytime the market's gonna really change directions, optimal reversal can be used to get us into that place. Okay, excuse me. Now, the other thing is optimal reversal could be used to actually also get us to catch this move too, right? Even the 3 to 4s and the 1 to 2s, because it's whenever the market is going to shift and change directions. Now, we generally like to trade with the trend, but I just want to give us an understanding that it's when it's changing and turning the corner. Optimal reversal can get us in any of these turns, all right? You can catch the major reversal or you can catch the continuation. Now, we have some help though with optimal reversal, something that's in place for us to help us kind of do that. Before I get to that, I also want to make sure that we understand that all these impulsive moves and corrections, they're moves that look like this on one time frame, but when you drop down to lower time frames, you actually find out that there are fractal waves within the wave, okay? There's fractal waves within those waves that essentially are making up that impulsive move. And you could go all the way down to the 1 minute time frame, and there's moves within those moves that's making up. Now, what we do with optimal reversal is we utilize the wave convergence really of all these multiple time frames. When they all come together, this is when there's going to be a reversal, when all of the time frames make their move and finish at the same place, right? So the higher time frame, the one that's lower than that and lower than that and lower than that, when they all come together and end at the same place, that's when there's going to be reversal. Well, we have a tool that actually lets us understand when that is potentially going to take place. So the first component of optimal reversal strategy is this indicator right here, FAST33. If you don't have access to it, I'll make sure you have it by the end of the call. FAST33 only works on 15-minute, 5-minute, and 1-minute time frames, okay? This is FAST33. Now, FAST33 is made up of a couple things, and I'll walk you through it. We have the green bars down here. We have the red bars down here. Those bars are called trend bars, okay? And so we have these trend bars that let us know when there is a sell or a buy happening, okay? So we have these red blocks and green blocks that are trend bars. The next part that we have are the extremes. This blue area and this red area are extremes, okay? We have two of them. We have the upper and we have the lower extreme. Now, if you've ever used any indicator like RSI, right, that has these overbought or oversold levels, this kind of has that type of feel to it. Okay, when the market gets overextended into these extreme areas, there's a potential turnaround that's going to take place. Okay, a potential turnaround. Now, good morning, Aaron. There's a potential turnaround that is actually going to take place. Now, right here, we have this orange line. This orange line is representative of the 15-minute. Okay, so orange is representative of the 15-minute time frame. Now, essentially, again, when you get into these extremes, this is when the market generally will reverse. Let's take a look. Let's take a look up here. You can see that up here, we were hanging out in the extremes, okay? And then what did we see? The market eventually came and reversed, okay? Right here, you can see we're hanging out in the lower extremes and the market had a pullback. Now, sorry, give me 1 second. My mouse just died. I got that Bluetooth mouse. Had to go back old school. Now we good. All right. Now, when I drop down to the 5-minute time frame, I see another line come in, purple representing what's taking place on the 5-minute time frame. All right. And then on the 1-minute time frame, we see the white. Okay. The white. Give me a moment. Give me 1 second. Okay. All right, so white, orange, and purple represent our time frames. Now, when I first started to use Fast 33, I was kind of in love with it. But then I fell out of love with it. And the reason why I fell out of love is because I did not yet really understand how to use it, okay? One of the first temptations that you run into is when you begin to use this, you begin to think, okay, well, the market, right, is showing that we're in extreme areas, right? So there should be a turnaround. Well, look at the corresponding area up here. Imagine placing a sell right here. What happens here? The market moved on up, right? It moved on up, went up another 120 pips. That doesn't seem like the market was selling at all, right? So we can't just go off of red blocks and green blocks, right? There's more that we have to do. And one of the things that I did really to help me is I looked at this and I said, man, I lost that sale, but dang, if I would have just bought when it told me to buy, I would have been fine, right? I would have made money. Now, that seems obvious, right? It went up, buying would have been the move. But what really clicked with me is that Fast 33 is powerful when you're trading in the direction of the momentum or the trend. So what did we do? We brought in moving averages. So we used two moving averages. We used two moving averages. We use an exponential and a simple, okay? And we have that on our chart. Now, the moving average that we use for the EMA is a 4. And generally, you're gonna see that that is blue, okay? Or sorry, white. It's usually white. And then our second simple moving average is the blue guy that I was just talking about. If I can get into these settings. And this one's gonna be 20, okay? So we have our 4 and we have our 20, okay? Now, the 4 moving average runs with the candle. So sometimes you may not even see that the 4 is on some people's charts because they've got good enough to be able to understand that the candles, for the most part, represent the 4. Wherever the candles are at, 4 is generally going to be, okay? Same with Underground Railroad with 3. The 3 is going to run pretty close. Why? Because it's the average of 3 candles, the average of 4 candles, right? So it's running pretty tight. Well, the 4 above the 20 gives us direction, all right? 4 above the 20 gives us direction. It actually, what it does is it lets us know that the market is bullish. When the 4 is below the 20, it gives us also the direction that is bearish, okay? And yes, trading in the direction of the moving average is the same as trading in the trend, with the trend. Now, 4 above the 20, here's what we do. When the 4 is above the 20, we want to ignore all these sell moments for entry. Because the 4 is above the 20, we don't want to be selling and contradict our moving average. Our moving average is telling us something. So it's a very simple way for us to filter out fast, all right? When it's above, we just want to pay attention to the green, okay, for the entry, So it gives us a better way to really utilize this thing. Now, excuse me, it's early morning, so my voice is still waking up. But when we drop down to the 5-minute, we also see the same thing, okay? We see that we'll have more success moving with the moving average. Now, for us, we don't trade against the 1-minute moving averages, okay? The 1-minute time frame we will not trade against, essentially for entry, meaning if we are trying to get in a move, our first time frame that we really care about is going to be the 1 minute. This is the optimal reversal strategy, so we're trying to catch this from the very beginning, okay? As early as we can. And the lower time frames make up the higher time frames, okay? So what happens is we start out our strategy focused on the 1 minute. Now, there's one more component that we have because I was studying, and many of us were in these studies for a while, some of us still are, we got into understanding really currency strength and currency cycles. And there was an indicator that we got introduced to that we didn't feel right leaving behind, okay? It's the currency strength indicator, CSA 5-step. Now, what it does actually is it lets us know strength and weaknesses in the market, because the market is really only moving, changing directions because there's a shift in strength and weakness, right? One currency is stronger than another currency. One currency is weaker than another currency. So what we do is we use this currency strength indicator to really let us see what's taking place. Now, right now, it looks like a bunch of mess right here, but I want to just break it down really quick, okay? Each one of these colors represents a different currency, okay? And what you can kind of see, if I highlight this area right here, is that in general, there's going to be stronger currencies and weaker currencies at any given time. I highlighted this area right here because it's just pretty obvious. There's a clear favorite right here. There's a clear winner when it comes to essentially strength and weakness here. Now, this guy right here tends to be the strongest. The way it works is the higher you are in this indicator, the stronger you are. On the bottom, right, the lower you are, the weaker you are. So let's take a look. Let's actually look inside and see what's going on. I'm not really sure why I can't just click on the regular settings. Here we can see yellow represents the euro, US dollar, pound, odd, New Zealand dollar, yen, and Canadian dollar. And at this time, what we can see is really this guy right here, the yen, is the strongest at the time. So one of the ways that you could apply this indicator, right, is coupling it with a weaker currency. Okay, and the two weak guys at the time were New Zealand and Australian dollar. Notice how they're actually kind of rolling together, doing similar things. That's something to note for our trading. It's one of the reasons we trade GA and GN together, because a lot of times they are actually cousins and they're moving and doing a lot of the same things. Now, what essentially we could do with this information, let me turn off what's not relevant right now. Right here, we could couple the yen with the Australian dollar and New Zealand dollar. What are we trying to do? And this is the word that I ask you guys about when you teach. I mean, you want to have it in your notes. What you want to say, talk about it. We want to exploit strength against weakness, okay? And so right here, we have the yen. And down here, we have the odd and New Zealand dollar. Now, let's think about the charts for a second. How are these usually put together? Well, you would normally have odd JPY or NZD JPY. Odd or NZD being the base currencies, the yen being the quote currency. So if I have a strong or weak base, but I have a strong quote, the market is going to be bearish or bullish. Which one? It's going to be bearish, okay? It's going to be a bearish market. So in this case, I could be selling odd JPY. I could be selling NZD JPY, okay? And that's how we would use it. Now, we're on GJ right now, so we're going to eliminate everybody else. When I look at the currency strength right here, let's put a line right about here. Why am I putting a line right about here? Is because this is where there was a shift in the strength and the weakness. Essentially, right here, the yen went very strong and the pound went weak. Now that actually started over here, really was the initial change of strength. But let's take a look at these two areas. I'm being a little bit more detailed today than normal, but it's because we do have some new people. And I also want to remind us of why we're doing this, set the tone for January for 2020. So right here, we can see the market went into really a bearish move, okay? Right here, we had some consolidation, and we could see right here, they were both kind of doing the same thing. But here, this is when they begin to create space. And right here, we could see that the yen went very strong, the pound went very weak. As a result, we had this bearish push right here, okay? Same thing right here in the area that we highlighted. It was moving sideways, kind of pulling back essentially. And then after that, the pullback was over. The yen went strong and the pound went weak, right? So with all of the things that we talked about, Elliott waves, our fast 33 indicator, our moving averages, and now currency strength, this is how the optimal reversal strategy was birthed. And we put all of these things together to really give us an edge on entering the market. If we know that the market is not going to really change directions unless there's an exchange of strength and weakness, well then let's use that to our advantage. Let's exploit this indicator, right? Let's exploit strength versus weakness. And that's exactly what we did. So there are 5 steps to the optimal reversal strategy. 5 steps. 5 easy steps that anybody can follow. Step number 1. All right, step number 1. We actually set an alert on our currency strength, or there's another indicator I'm about to introduce right now called the vortex indicator. And so what we do is we wait for a cross of the 5-minute CSA, which is currency strength, or vortex. All right, the indicator. Wait for a cross of the 5-minute, and what do? We set an alert. Set alert. Okay, so let me pull up the vortex. And the reason we use the vortex is because the vortex can work on any of our actual currencies. It could work on our commodities. It could work on US 30, on our indices. It could work on pretty much anything you're trading, stocks. Currency strength will only work on those 7 currencies, countries that are available. But the vortex will work for everybody. Also, the vortex is actually, it loads quicker. So like if I go to the 5-minute, we can see vortex is already on the screen. Currency strength is still loading. So we're gonna get this out the way. And so now we have our indicators. And so what I did to my vortex is I made this very simple. If you see my chart, you can see that I have blue and white candles. So my white candles are bears, my blue candles are bulls. And so what I did is I made my vortex correspond with my candles. So I always know that my base currency is blue and my quote currency is white. So I can quickly, no matter where I am or whatever chart I'm on, I know what is what. I know that right now the base is weak and the quote is strong. So first step, we wait for a cross for the 5-minute vortex, okay? And what do we have here? We have a cross. I'm gonna just stick to this area because it's pretty simple. Now, once we get the cross, we move on to step 2, okay? So what am I talking about? A cross, I mean where we have the blue cross down or above the white, all right? It just needs to change directions. Now, just like our moving averages, the next thing we're gonna do is we're going to drop down to the 1-minute time frame. And where we're going to check to see if we have confirmations of our 4 and 20 moving average cross. And it needs to confirm what we saw on the 5-minute. Okay? So we see this cross right here on the vortex, and we drop down to the 1-minute. So for the sake of making this easy, I'm gonna turn on the replay. We need to see the 420 cross happening as well. And hold on, I messed up. All right, here we go. All right, do we see it right here? No, the market actually has not crossed. So what did I say earlier? We don't trade against the 1-minute moving averages. So what do we need to do? We need to wait. 420, wait for it to get below. Now we see it kind of consolidated for a second. Now, once we have the 420 cross, our third step is to bring fast in. And what we're looking for is after we get the cross, so the cross happened here, right? We are waiting for a new confirming trend bar, okay? So step 3, the key word is new confirming trend bar. Okay, wait for a new confirming trend bar. So again, what we need to see is we need to see this breakdown. Well, it broke down and went back up, which is fine. So now what are we gonna do? We're gonna wait for it to cross again. So it crossed here. So then what are we gonna wait for? The new confirming trend bar. After the cross, we wanna see an additional confirming trend bar. because when it crosses, many times it's already going to be there. We want to see a confirming trend bar for two reasons. One, there's usually a pullback, okay? There's usually going to be a pullback. Why? Because what do I tell you guys all the time? Moving averages are like lazy man's market structure, lazy man's trend lines. Whenever you have a break of structure, what generally is going to happen is going to be a retest. So that's why a lot of times we don't move on the first, because a lot of times the market likes to retest, right? Likes to retest. So we want to wait. Once we get that 1 minute new confirming trend bar, then we want to go to 5 minute and 15 minute and check for confirming trend bars. These all got to be saying the same thing, right? Now, when we check the 5 minute and the 15, to enter the trade, we only need one of them to be agreeing with the 1 minute. If we have both of them agreeing, then perfect, it's a home run. But we only need one. Okay, let's check this out really quick. We have our 1 minute. We're gonna drop down to the 5 minute. And here, we also wanna see that the 5 is also confirming a sell, because we're not gonna let our 1 minute go by itself, okay? So here we can see the 5 minute is on a sell as well. So we can actually enter this trade for the sell. But we're gonna check the 15 minute. And the 15 minute is also on a sell. So 2 is perfect. All right, so now we're in the trade. We're in the trade. All right, now let's take a look at this. Our entry is right on that candle. All right, so we're in this trade. Our stop loss, because of the precision of this, you can either go with above the
Excuse me, can you, when you just said our entry is right on that candle, I was trying to follow you and I missed it. Can you point exactly to which candle you were referring to, please?
where the yellow and the green intersect.
Got it. Okay, I see that.
So your stop loss can be above the structure, or it could just be 10 pips. It could be above structure, or it could be 10 pips above your entry, whatever you're more comfortable with. In this case, 10 pips is up here. So now we've entered the trade. I told you guys there's 5 steps. The 5th step is our exit step. We exit when we have an opposing trend bar on the 5 minute or 15 minute. So we have options, okay? Some people will want to make the short, quick move, and then some people will want to take the longer move. So let's look at this. 5-minute time frame, let's see when our exit would have been. We'd still be in the trade. But we haven't got an opposing trend bar. If we have it on a 5-minute, we definitely have it on a 15. Now, from this entry, we move down 58 pips, okay? Now, optimal reversal is not just an entry strategy. It is an entry strategy, but it's also a system. It's a way of thinking about the market, okay? It's a way of really understanding what's taking place. At any given time, it doesn't matter if I've missed like the 5 steps. If I'm curious about what's happening in the market, I just need to understand the components of ORS. I just need to understand the components. For instance, let's say like right around here. I'm gonna change the color of this. Let's say right around here, at this area, I am where yellow and blue intersect. Let's say right here, I am thinking about buying. I don't know, I got a signal, someone sent me a signal. Someone said, you know what, this was a previous level, so I'm gonna buy off of this level right here, right? This one right here. I'm buying off of this area to go up, okay? This is the system. Here's the way to approach this. Here's the way, right? Here's the way. I would need to think to myself, okay, I got moving averages, I got fast, and I have vortex or currency string. Is this a good idea to enter a buy at this area? This is just the system. Forget the strategy for a second. The system. Well, what things do we know? It's not really a good idea to trade against the moving averages. Our moving averages at the time are telling us that the market's bearish. The 4 is below the 20. So in the system of thinking, this is just a bad entry. We don't want to enter a buy here. What else makes this a bad entry? Well, fast is telling us to sell. Fast is telling us to sell. That's also a bad entry. And the biggest thing probably is what's happening with the currency strength. The pound is weak and the yen is strong. So it's the system that we have in place, right? Not just the strategy. The strategy is the 5 steps, but I want us to get to graduate to the place where we also understand I can just apply this to my overall thinking about my trade setups. Is this a great place to get in a trade for a buy? Right? I know it's a previous level. I know it was consolidation over there. But this ain't the one right here. Right? We're seeing that the pound is really weak and the yen is really strong. We're below our moving averages. 4 is below the 20. This is a bearish indication. So it's a bad time for a buy. Okay? This is what you want to think. You want to use optimal reversal to help you understand the overall. Okay? Overall. I'm going to show you. I know we do Underground Railroad with different indicators, but that's the reason why that's like that is because I didn't teach publicly everybody in like that I taught Underground Railroad to. I didn't teach them optimal reversal. Optimal reversal is exclusive to you guys, to us, right? To my family. So optimal reversal I didn't go through the steps of teaching that to them. So I gave them something else. I gave them different confirmations. But at the core, optimal reversal is still the foundation of how we would really qualify any trade. Real quick, let me know if that makes sense.
Yes, I have a quick question, Chuck, which you basically answered it towards the end of your explanation, but I just really want to be sure. So basically you're saying we can, excuse me, come to the charts at any given time of the day and just pick that starting point. So let's say, you know, on Wednesdays, you know, my trading time is, excuse me, about, let's say 3:30. I can come on at that time and look at the charts and apply optimal reversal.
Yep, the system is going to let you know overall what direction you should be looking at for your trades at the moment, right? If it's a good, like, you're still gonna want to chart, right? You're still gonna want to use the scanner. You're still gonna want to do the things that you're doing. But I'm just saying the system, the things that are in place, our moving averages are letting us know direction, right? Our currency strength is letting us know strength and weakness, right? Fast is letting us know about what's happening with the Elliott waves. All these things coming together help us at any time, doesn't matter what's happening in the market, understand what we should be kind of looking for at the moment. I'm gonna show you that again when we get back to Underground Railroad.
Got it. Okay, I just wanted to be clear. Thank you, Chuck.
The 5 steps is our strategy for entry. The 5 steps is our strategy for entry. For when is the optimal, when is the most ideal time to enter a trade. That's the 5 steps. That's the 5 steps, okay? The moving averages, when we talk about the system, now we're talking about what's happening with currency strength, what's happening with our moving averages, what's happening with Elliott waves and fast. That's the system, where it's not about like step 1, step 2, step 3. It's like, what am I getting from an overall picture of our components, right? So it doesn't matter. Let's go over to US 30, right? It doesn't matter. It doesn't matter. If I did not have all of my moving averages or anything on the chart, and I got sent a trade idea for a buy off of this level right here. They're telling me to buy right around here. Why are they telling me to buy? Because last time the market in this area, it bought up. So now they're looking for their buy again off of that level. But what is our system telling us? Our system is telling us, nah, I'm not gonna look for a buy right here. Not right here. I'm below my moving average. Not right here. There's my base and quote. This shows bearish. Nah, not right here. Right? On fast, everything is showing bearish momentum. I'm dwelling on this a little bit and taking my time, mainly because I'm seeing us get away from the simplicity of what ORS is. And there's many different trading styles, and it's fine. It doesn't matter what you're trading. ORS is available, right? ORS is available to help qualify your trade. The components of optimal reversal strategy are always going to be there. They're just always going to be there. I don't care what it is, right? They're going to be there. So if we take the time to learn it, use this to our advantage, right? Use it to our advantage to really help us figure out what we should be doing, what direction we should be looking in. All right. Before I move on, I just want to make sure everybody is comfortable. If they get that light bulbs coming on, feel free to let me know. Need me to repeat anything?
Hey, Charles, can you hear me?
Yeah, I can hear you.
Hey, you mentioned switching between the 5, 15, and 1 minute chart for different confirmations. And you said, we only need 2 for the entry. You also talked about the importance of like looking at the moving average as the direction that you should trade in. Help me, I'm probably the newest person on the call. If you vacillate between the 5, 15, and 1, would the moving average display something different and cause you to kind of have like paralysis by analysis at that point? Or should they always confirm each other? Like,
it's a good question. We don't trade against the 1 minute. I made that statement earlier.
okay.
The 1 minute, we don't trade against for our entry. For instance, if the 1 minute is actually saying, buy, but we're looking for a sell, then we're not going to trade against that. The higher time frames, right? 5 minute, 15, anything above, we can trade against. Now, the reason why we can is because remember what optimum reversal is designed to do. It's designed to catch the reversal or to catch the continuation. The higher time frames are already going to be doing one thing. Everybody's going to be doing the same thing. Who's going to start off the party, get everything off, is the 1 minute. The 1 minute is going to be the first one to change direction. So what's happening on the 5 minute, the 15, is not necessarily relevant, not necessarily for our entry, because we're trying to get in there at the earliest possible place to get into that trade. And the 1 minute is the only one that can get me in the soonest. The rest of them, we may be going against, but hopefully we're only going against them temporarily. We want the 5 minute to come join the party eventually, but that's after we're already in the trade. We're not going to wait for the 5 minute, because if we wait for the 5 minute, now it's a delayed entry. We're leaving pips on the table.
I got you.
However, this is the 1 minute. This is the earliest time that you can get in. Now, optimal reversal, the strategy can be shifted up a time frame. You can shift everything we just talked about up a time frame. Let's go over it really quick.
That's good. That was going to be my next question. What if I'm a little gun shy, thinking that the 1 minute might give me a false alert? Then, so you're saying then I might want to use the 3 minute in that instance.
Right. So here's the shift. Instead of waiting for the cross of the 5 minute, you're going to wait for the cross of the 15 minute. So let's look at this. We're on a 15-minute time frame, and here's our cross. So right here is where we have this cross on the 15. Instead of dropping down to the 1 minute, you'll drop down to the 5 minute and confirm the 420 cross. you want to see that the 4 is below the 20. Instead of waiting for a new confirmation on the 1 minute, you're going to do it on the 5. So when do we get the confirmation? Right here, the confirming trend bar. So we got the new confirming trend bar. Step 3 is complete. Now we go up to the 15-minute time frame. And we want to see that we have a sell also. And we do. Okay. And usually it needs to be one right underneath it or a candle removed from it. You don't want to see like 3 or 4 candles have gone by. It needs to be a fresher one. So there you go. There's your entry, right? You can stay in the trade until here if you need to, right? Until you get that opposing trend bar. Now, there's one more thing we use for an exit. And again, if anyone doesn't have all these things, we'll get it to you before we get off. It's called the whole moving average with bands. And so the whole is what we use for exits, not entries, for exits. It's another option. So if you don't want to get out on the trend bar break change, you can get out on the whole flip. And obviously that was ideal, to stay in this until down here when the whole flip back. So now you're talking about 132 pips versus the 25, 30 you picked up in here. So the whole can be used to keep us in the move longer. Okay. Any other questions before we move on this? I want to make sure that you guys are seeing the value in Optimal Reversal, because I feel like it's like the stepbrother now to Underground Railroad, which is fine. Underground Railroad is a trade setup. It's a setup that we look for in the market. But Optimal Reversal is a way of qualifying any trade. It doesn't matter what's happening. Coming from the scanner, let me show you real quick. Let's see. I may need to pay my bill today. I think my billing's the 4th. I gotta be locked out. Hold on a second. Any questions? You guys seeing more value in RS? Did anyone fall victim of kind of forgetting its power?
Charles, you got a question in the comment section.
Yeah, only at the exit. Only at the exit. You don't want to use the whole for entries. It can be tempting, but the creator of the indicator said no. Do not use it for Do not use it for exits. Why does it say my password is incorrect? Damn, I have to figure this out in a second later. Because I can't even get into the actual place to. Let me try one more thing. Oh, I got me. Just one more minute.
Hey Charles, I got a quick question before I hop off real quick. Can I turn in my 2-week notice now?
Hey, man.
I want to hear about that, sir. Are you about to do that?
Nah, not yet. It's gonna be soon though.
Okay. Are you going to come on Sunday and tell us about it when you do?
Most definitely. Most definitely.
Oh man, I'm excited.
Hey, nah, it's none of us have any reason to stay on jobs this year that we don't want to be at. I'm telling you guys now, this will be the retirement club. With the Saturday morning calls, we're all passion, all purpose. That's all we do now. Some of you guys already got jobs that you like. That's fine. I like what I do too, but I like to not have to do it, and that part is where we want to be and where we will be this year. Website's moving slow.
So it's good seeing everybody. I gotta hop off, go do a car. So I'll holler at you, Charles.
All right, man. You gonna have to get your workers in place, man. You're gonna have the whole fleet.
Most definitely.
All right, see you tomorrow.
All right, for sure.
Have a good one.
All right.
Man, they're playing around.
Hey Charles, for the Fast 33, is that the MTFA Fast 33?
Yep, that's it. So the password is good for 90.
It didn't ask me for a password though.
You sure?
I mean, I found it in the public library. Should I be looking for it somewhere else?
Oh, is it working on your screen?
It when I selected it, it's there. Yeah. I mean, everything is flat. Oh, I'm on Apple stock. I mean, but
Go to the 15-minute time frame.
Yeah, it's all flat. But you know, I trade options. So let me go to something in Forex real quick. Yeah, everything is flat. Like I'm on the Euro, New Zealand dollar. Is there a particular currency pair I need to be on just to see if this works? I've been following along on my phone at first. Now I'm just now to my laptop.
Hey, Fred, did you type in Fast 33 or are you talking about the whole?
I typed in Fast 33. Is there something else I should be doing? And I don't need to tie up the call like for this. I can figure this out later, but.
Nah, you're good.
What was the password, Chuck, just in case it asks me when I go in?
Yeah, so I don't know why this is tripping. All right, so look, when you go in here, Fred, so it's there's nothing gonna be here. And the reason it is because you need an enable code. So what
Because
you
what?
wanna do is you wanna click on the settings of that indicator.
Okay.
And then you wanna go to inputs. And then you wanna enter the enable code.
Right. Okay. Okay.
Good for 90.
Settings. Enter enable.
Lowercase good for 90.
You said for enable, go to 90. Oh wait, let me see what your screen says. Enter enable. I'm sorry. What did you say it was?
Good for 90.
Good for 90. All right, and buy alert extreme. That all that stays the same.
That go to on the bottom where it says defaults and put save as default.
All right, now we in the game. All right, I got some action. I leave all the other stuff as default. The enable full channel trend bars, all that stuff.
Yeah.
Cool. Now, if I delete this indicator, every time I reload it now, it'll populate this way.
Yeah. So delete it and make sure. Yeah. They're not even sending me my reset. It's all right. We'll do that next week.
But to your question earlier, Chuck, yeah, I definitely had mental block from the different steps, and I had put this as, you know, to the side as a stepchild to Underground Railroad. So I will try and implement this throughout this coming week and keep you posted.
Yeah. I don't want you guys to turn it off. Yeah, I can't get into my. Can any of you guys get into your scanner? Let me know. I can get into my back office, but I can't get into the scanner.
And Chuck, by the scanner, you're referring to
Well, I can't get into IAM.center.
you're referring to the harmonic, right?
Mm-hmm.
Okay, let me try to get in and see.
I'm in, Chuck.
I'm in too, Chuck.
Oh man.
I'm in too.
Y'all must have been praying or something. All right, here we go.
There it is.
Okay. So we got all these things coming in, right? Let's look at this GU setup really quick. GU cell, right? What is Optimum Reversal? It is has the ability to get you in on the major reversal, right? Pullback. Look, we got a high, so lower highs. Market is downtrending. Market pulled up. What is this? This is the continuation. Optimum Reversal can get you in on the continuation or the major reversal. So let's go look at GU, see what that move was for a second. All right, I think it was this one. Yeah. It was actually this guy. Right? So let's just talk about it for a second. This is the D point. I'm not going to draw the whole scan out, but this is the D point. Let's take a look at the 5 minute. What will we be waiting for? We'd be waiting for a cross, right? A 5 minute vortex. Well, there's your cross. Now this one's a little tight. Market's a little tight, so, but you would have got the cross here, right? Let me do a different one because it's really a tight zone.
Which that was the perfect example for us too, Chuck, right? If we go onto the scanner and see something like this, we can right off the back see that it's a pretty tight zone and just kind of maybe look for something else.
Well, yeah, but it was the holidays, and you know that was right before the market was about to close of the weekend as well. So it's just a tight zone. So that's not the best one to. How many pips was that? It's not terrible, 55. But you see how it kind of just consolidated. So it really didn't go anywhere. It came down. This one will be better. So I'm looking at GJ. Right, there we go. 313, 30 pips. That's more like it. Let's just look at GJ again. That's probably the move that we did. Yeah, it is right there. So we already know where we got in on the other move, but let's just look at the height of that, right? Here it would have been the D point. Right, here's the D point. Same place as what the scanner gave us, right? Up here. So we have that D point. Now let's look. Let's go back in time and take a look at what was happening. Okay. Well, what are we looking for? We're looking for the cross of our vortex to start everything off, right? So there you go. There's that cross. What else are we looking for? We're looking for the 420 confirmation. Oh, it's right there. It felt weird because but that's it right there. So here's the cross, looking for the 420 confirmation. Don't have it. 4 is above the 20. Now we have it. What are we now looking for? We're now looking for, right? We're now looking for the new confirming trend bar, which happened right here. So there's the new confirming trend bar. We'll put an entry right around that area so we can see it. Okay, there we go. Now, what else are we trying to do? We're going to have that stop loss, right? That stop loss is going to be 10 pips or above market structure. So you could have put it here or up there. The powered option reversal strategy is that you can have the tight stop loss. All right. Here's one thing to note. If you're trading off reversal and you're in drawdown, you probably either skip the step or your setup like is no longer there. So you're now trading essentially against your steps. Okay? Against your steps. Fred, you want to use the vortex, not the CSA. So you want to search for vortex. That one's going to be faster. So you want to trade. You want to know that you like if we're in 15, 20 pips of drawdown, it wasn't an optimal reversal entry. I'm telling you now. Optimal reversal, when we get the entry, right? When all the confirmations, you're really just dealing with commission and spread. That's how precise it generally is gonna be, right? So let's look at this really quick. So that was our entry. Look at our stop loss. Unless, right? We took off already, right? We're down here. Now, when the market went back up, right? So how far did we come down? We came down 27 pips. To go back up the other direction, this is no longer optimal reversal. Why? Because look what happened. Optimal reversal now has given you a buy. This is what I mean by, like, if you're in drawdown, optimal reversal is calling for a buy. Vortex cross right here. There's no way right here the stop loss should be getting hit. Let me know if that makes sense. You can put it in the chat or you can come on mic. Let me know if that makes sense. This stop loss should not be hit. I should be out of the trade. Why should I be out of the trade? I have a vortex cross. Why should I be out of the trade? I got a buy on fast. Optimal reversal is not designed to be holding on to and hoping. It's not a hope strategy. I say it all the time on the call. There's times where I'm like, man, I hope this works out. I hope this thing doesn't hit my stop loss. Immediately when I say that, I know I messed up. There's something I'm ignoring that told me to get out in the first place. Yep, whole flip. Whole flip exit. Troy's completely right. This is not a hang on to it. Hope it works out. 4 is now above the 20 on the 5 minute. We were below the 20. Now we're above the 20. There's so many reasons why this stop loss should not be getting hit. We should be in profit, taking our money, take it off the table. Because we had our confirmations in the opposite direction. Right? I've been in trades in the sell, but I got bullish confirmations. But I'm hoping, right? 2020, no hoping. We're in control. My friend posted something today. She said your trade has 4 options. 4 options. I'm gonna put it on the screen. Four options. You guys ready? You guys know the 4 options? Here they go.
I like that.
4 options. We win big, we win small, we break even, or we take a small L. With our strategy, this is really the only thing that we should be seeing, unless there is some random news. But other than that, we should not be taking big L's. Not this year. Okay? Because the strategy is too precise. Everything, it has nothing to do with, like, It's not that it's so great. It's just that you got to think about what it consists of. It consists of Elliott waves. It consists of currency strength. The market is not going to change directions unless there's a currency strength change. And it consists of the moving averages letting us know what's happening. Okay? That's why this should not happen. I'm telling you, if you lose a trade like this, something went wrong and you ignored an exit. Or again, the random moves. But other than that, we should not be hoping. So let that be accountability for yourself. If you feel like you are unsure what the market is going to do, if you feel like you're hoping, then there's a breakdown somewhere in the strategy. There's a breakdown somewhere in the steps, somewhere in the system. Okay? So hopefully that hits home. So right here, the market decided to revisit. Now, let's talk about this revisit. Why did the market revisit this area? Someone let me know.
Because it's like a demand zone or supply.
Yep. It's a supply zone. It is a supply zone. How do we know it's a supply zone?
Because the candle there to the left, the two candles to the left.
What specifically?
Oh, it's like a bearish candle.
What kind of bearish candle?
Bearish engulfing candle.
There you go. Thank you. Not everybody is as familiar with this. These candles for Underground Railroad and for Optimum Reversal are going to be your best friend. These candles, I know that people like head and shoulder patterns, people like double tops, double bottoms, all that jazz. The most important candle for my trading is this candle. Engulfing candles. A candle that overtakes the other previous candle or previous candles. Okay? Engulfing candles are very important because they tell a story. All right? You want to look for areas that you have engulfing candles. And what are the rules to an engulfing candle? What you want to do is you want to box up the body of the previous candle. So this would have been a silly place for me to put my stop loss in the first place. Why? Because I put it right in the middle of a supply zone. So I know I said 10 pips, but this is where I got to think, use my head, right? I would want to put my stop loss above the supply or below the demand, okay? These candles are giving us a lot of information, okay? So right here, I can see that the market went back and revisited that area. Now, I should have already taken profit. The hole got me out. I got 2 holes on here. Why do I have 2 holes? Because in my settings, I have it set up so that I can see the 15-minute hole at all times. So let me show you that. My 15-minute hole is this jagged one, the one that looks like a staircase. In my settings, so for the hole, if you don't have the hole, you need to add the enable code 294MAY. 294MAY. Also, before I forget, in your settings, you see how over here I have the fast? If I don't have anything in there, and I have the bands and there's nothing there, you want to make sure that your enable codes are off the screen. And the way that you do that is by going into the settings under status line and turn off indicator arguments. I just turned it back on. You know it's on because you'll look at FAST33 and you'll see the enable code. You'll look at the whole and you'll see the enable code. The creator of the indicator asked that the enable codes are not just on display like that. So please turn off the indicator arguments. So you want to uncheck that. If you have it on your screen, uncheck it. All right. So we shouldn't be in this trade, but just thinking from a trade standpoint, right? I've taken profit. Where could I find a potential entry, re-entry? Well, maybe off of this level. So this is where I would start next. What are we waiting for? 5-minute flip, right? Cross. Ooh. All right. We haven't got it yet. All right, we got our 5-minute cross, right? We set that alert. So then we would go through the steps again and start over. Does that make sense? We came off of a sell area and we waited for our confirmations. All right, that's what you want to do. You want to wait for your confirmation. All right, let's move over to Underground Railroad. Anybody have any questions before I do that?
Yeah, sorry, Charles. I was trying to add that indicator with the hole, and I don't think I got it. It didn't populate on my screen, at least.
So you want to type in MTFA in the indicators.
Right.
And then you'll have a few of them over here. And the one you're looking for is HMA with bands.
Yeah, it's the first one.
You see it?
It's the first one on mine. MTFA HMA with bands. The FX coach. Is that what yours says? I can't read the the text on your screen that good because I'm watching my phone and I'm using my laptop.
It is the FX coach. So as long as you click on that one.
Okay. All right.
And then you need to put that code that I just gave you guys, 294MAY, FORMAY.
Yeah, it's not showing on my screen though. So never mind, man. I'll figure it out later.
All right. Let's move over to Underground Railroad. Hopefully that revisit, reminder of optimum reversal, it doesn't matter, you know. A lot of us use a scanner. I'm not gonna get into it, but DeLorean, the trade setups on DeLorean, it could be anything. Gold Cup sends out a signal. It doesn't matter what it is. All of these things can be qualified by optimal reversal. All right, the system, the strategy. Okay, so let's talk Underground Railroad. All right, let's check it out. I'm gonna just go with GJ. Here's what we do. We need to identify the beginning of the session day, okay? The beginning of Sydney session. One of the things you could do is you could go into appearance and you can turn on in your settings, turn on session breaks. Okay, that's going to give you the change of day for each session. Now, that is my 2 p.m. That is East Coast 5 p.m. Okay, so that's where you should see it. Starting with at 2 p.m., not 5 p.m., you want to identify the highest point and the lowest point of the first 8 hours. It's really gonna be first 7 and a half essentially. And what you're doing is you wanna box this up. This is what we call the A range. Okay, the A range. Now, what the market generally will do is it will create an initial high of the day and an initial low of the day. Okay, an initial high of the day and initial low of the day. All right, that's what you have. It's creating its world and its structure. What the market typically will do is it will take, after the A range, it will try to go and break one of the highs or the lows of the day. And what it usually will try to do is it will break it with a false move, and it will take us in the opposite direction. Now, we all would love to be in this move. I think we all would. However, the Underground Railroad is about catching essentially what happens with the break out of the A range. Now, what you want to do is you want to identify the most recent low, and you want to line that up. You want to draw a trend line on the 9:45 candle. You want to somehow connect it as best as you can. We're not going to cut candles, and I'll show you what I mean by cutting candles. You want to identify the low, and you want to identify the 9:45 candle. Because our objective is to catch the impulse out of the range. Now, the next thing you want to do is identify the high, most recent high, and the 9:45 candle. Okay. Now, I probably should have did GA because I don't normally even do it with GJ, but it is what it is. Let's just do GA because the preferred pairs are GA, GN. GJ does work for sure. They all work, but I already marked up GA yesterday, so I already know what happened. Go back through. I'm not going to explain everything. All right, cool. What are we looking for? We're looking for that low and that high. So here, market's on that downtrend. And here, All right. Now, here's the thing. Once you have the structure set up, okay, you want to drop down to the 5-minute, and you just want to make sure you have precision on your levels. So go ahead and adjust it. Make sure that you're including all of your levels. Now, the most basic way of trading this, is on a 5-minute time frame. You're going to want to wait for a candle to close above your green for the buy or below your red for the sell. So the first candle that closed here was right here, the 5-minute. All right, so we had a 5-minute close of that candle. When that candle closed, that is your entry. Now, your stop loss is going to be above or below market structure. So our stop loss would be above structure. You could put it here, or you could go all the way up there. All right. We have lows are declining, right? Decreasing. So we got lower lows. So the last high was right here. So your stop loss would be above that high. Now, where could we take this to? Okay, where could we take this to? Well, the first push, it moved down approximately 10 pips. Okay, and then it retraced, right? But it didn't come up and hit our stop loss. If I held the trade, it gave me about 21 pips. Okay, potential gain of 21 pips. That's the Underground Railroad trade. Now, for me, I'm not riding this drawdown back up, me personally. I'm probably taking either a small win, right, or a break even here. I'm not going to ride this back in the drawdown. However, if you want to do the walk away type of scenario, then that's fine. Just make sure that you're putting your stop losses in the right areas, above or below structure, okay? So right here, you could have put it right here, and even though it went through the drawdown, we didn't get stopped out. And you could have rode it all the way to here. All right, now, destinations. Here's taking us back to what we just talked about. I just told you guys there is a candle that I pay attention to the most. And what was the candle I said I pay attention to the most? An engulfing candle, okay? So when I'm looking for my levels for my destination, right? There's an area right here. There's an area right here pretty much. Right? There's an area here. And there's an area here. Okay? These are all destinations for the market. Well, what I want to do is I want to look and see, well, where could the market actually potentially stop and turn around at? Well, we see what happened here. It actually turned around here, right? But then I could also make this my target, right? But there's something that I see here that's standing out. You see this consolidation and you see this engulfing candle right here? Box this up. This right here is a demand zone. And what I say about supply and demand, you want to box up the body of the previous candle. So for me, this is a drawing point for the market. It's the same thing with this one, right? The market eventually wants to come and say hello to these areas, okay? So for me, I'm more attracted to this level than even this level or this level. And also look at the 15-minute. You see that on the 15-minute, it's a clear engulfing candle. So on the 15-minute, I can see that this right here is a definite demand zone that the market could come back and revisit. And that's exactly what it did. It came right back into the zone. So for me, what I would do is I would place a take profit at the beginning of that demand zone. Okay? At the beginning of that demand zone. That's what I would do. I say at the beginning because the beginning of it, the top of the zone is the first area that this thing could bounce off of. In Naked Forex, they talk about this. They talk about zones being like beer bellies, right? How it can be firm, but it also can be a little soft. Well, right here we can see it was a little soft. It pushed into the zone, but it also was pretty firm because the market pushed off of it. So the easiest way again to make this trade is to do 5-minute candle close, stop loss above the structure or below the structure, and then look for areas that the market will be drawn to, okay? And the market's gonna be drawn to supply and demand more than just support and resistance, okay? Supply and demand. That's the target for me. Now, for those that use Fibonacci, check this out. Right here, we can see that the market basically came into that 50% area, right? So you can see supply and demand is right in that zone. The first hit was off the 38.2. And this next one was the 50, right? So one of the things that I'll do is I'll look for targets that are near and around my fib levels, right? That's one option. The other option, again, is just to look for the areas. Now, we have optimal reversal. So let's pull optimal reversal out. If you're gonna manually be watching it, right? You're gonna be right there. And now we can just pull out right now. I can see here I could have got out in here, right? Or I could have let it come all the way down. Where did the whole this whole time was on a sell, right? So the hole hadn't closed either. So you had an opportunity, even though it bounced off of here, it still stayed on a sell. It still got you down here. Now, this is essentially sideways consolidation on a higher time frame. The market truly hasn't really gone anywhere. And when you have that scenario, your moving averages are going to be crossing back and forth. In consolidation like this, the moving averages are going to be really tight and crossing back and forth. That's going to be the norm. However, as we see, there was still about 20 pips in there that was available to us. So let's take a look at this. If we incorporate optimum reversal, were we below the 20? Yep. Were we on a sell? Yep. Was the pound weaker than the odd? Yep. So those were things that were telling us, okay, the market is available for us, that everything's there for us to get into this trade, to confirm, right? Some of us are using, and I'm not going to teach on it today just because of time, but some of us are using the Underground Railroad, the one that I taught the public, the 3, the 8, and the 20. The 3, the 8, and the 20 below the 20, the 3 and 8 below the 20. I know it's messy in there, but the 3 is the pink, the yellow is, well, the 3 and 8 are pink and yellow, and the blue is the 20. Both of those moving averages are also below the 20. So you had confirmation, right? Multiple confirmation. Stochastics was on a sell, right? All these things for you to say, okay, I can get in this trade. This is my point. You can make it as easy as 5-minute candle close, or you can bring in your other confirmations. But I want you guys to do the homework. I want you guys to see how many times this just plays out by market structure. Okay, remember I didn't say 10 pip stop loss. I didn't give a number. I said, what is the structure telling us? Okay, structurally, I could put my stop loss here. And here's what really happened with this. If you saw this happen, what should happen in your mind? Somebody let me know. We're gonna enter here, but what do I have at the back or at the forefront of my mind?
I don't understand the question.
Seeing how these candles are moving, what's something that may pop into my head concerning what could happen with the market? And I know it's there's a lot of things that could pop in your head, but just give me something that you would be thinking if you were in this trade.
Where am I going to exit? Where's my profit zone?
Okay, so where's my profit zone? So like we said, this was an area, right? So someone may say, you know what, this is too close for me to enter this trade because I'm too close to this area. So that's one of the thoughts that may pop in my head, right? I got to consider how much room, is it worth it for me to get in this trade, right? And someone may say, yeah, 7 pips is worth it for me, right? Someone may say that. So that's the first thing. I'm going to skip to the chase. You guys see how we broke out of that trend line? We broke with an engulfing candle. What did I just say early in the call? the market is attracted to these supply zones. What else do I know about the rules of a breakout? What else happens after a breakout?
Reversal.
Close. Another reword.
Retest.
A
Trace.
retest. So I broke this trend line, but do you think I possibly may come back and say hi?
Yes.
Yeah.
Yeah.
And where could I possibly say hi at?
The preceding.
Maybe in supply. So for me, I may not take this trade just based upon the fact that I'm too close to this and there's probably going to be a retest. Fred asks, is it safe to think of engulfing candles as indicative of supply? If not, how exactly do you define supply? Yes, engulfing candles produce supply and demand zones. They reveal them. They let us know where they are. The engulfing candle pattern is letting us know where the levels are at. So if I see that, maybe I stay out of this trade and I wait for the market to come back into here and see how it responds to that area. Oh wait, it rejected off, right? I got a candle that closed lower. Maybe my entry, instead of this one, is gonna be this one. Or I got my pips, my 7 pips, my 8 pips, my 9 pips. I made that money and now I'm looking for trade number 2, right? Or I'm holding on. Why am I holding on? Because my stop loss is here. I got a supply zone here that I feel is protecting me. And I'm just staying in it because I got a bigger target down here in my demand. Right? So it's all of these scenarios. For me, I probably took profit or took a small win. And then now I'm sitting back waiting for the next trade. Oh, here's the next trade opportunity off of the retest. I had this candle close lower than that, essentially an engulfing candle, right? So now I can enter this trade and now my target still hasn't changed. I'm gonna try to get down there. It was another engulfing candle, right? This is letting us know what's actually taking place. So I'm in the trade again. It went back up, retested one more time, and played around a bit and finally made it to our level. Okay? So how you play it is really up to you. I'm trying to give the scenarios. I believe the easiest way to play it until you're at the place where you're thinking about all these different things that are happening is to get in on 5-minute candle closes that break the structure. Stop loss above the structure and identify your take profit. And you want to see that it's going to be a 1-to-1 at least, risk to reward. Okay? You don't want a structure that is essentially, this is I wouldn't take that trade. I would not take that trade. This is too close. I would want to see more space, more room. So here, coming in here on the retest is fine. But it's all up to you. I want you guys to do the homework because the homework is going to help you shape your belief. Because the more times you chart this and see how it played out, is gonna kind of let you know if this works for you or does not work. When I went through the trouble of charting this, I discovered that this was working. And for me, I began to see it as something that I should be taking. Let's just look at last night really quick for gold. And then we'll wrap this up. All right, so it's here. Okay, we have gold. What is gold? We got the lows, right? Connecting the lows. If I go to 15-minute time frame, we can see right here. I can't really get to that 945 candle. In this case, we could do this. Now, I gave you guys a step that to prep yourself for. To prep yourself for the trade by using the MACD, the original MACD. And here's what we said we would do. We would use the data of the MACD to give us direction, Now, what you want to do in your back testing, you want to go to the 945 candle, 945 Pacific time, 1245 Eastern, right? The 945 candle is what you want to pay attention to. So you want to get rid of that 10 o'clock, that 1 a.m. candle. You want this one. And what you want to see at the given time is what is happening with the MACD, okay? For those that don't understand the MACD or need a refresher, if you're ever confused about the colors of what means what, just look at the chart. Whenever you're confused about an indicator, how it's working, look at the chart, what's happening. Right here, we have a bullish move, but we also have blue above orange. That's a bullish move, Blue above orange. Blue below orange is a bearish move. Look at the charts. Candles are moving down. So they work like moving averages. They are moving averages, okay? So you have these moving averages that have crossed here, letting us know a change of direction. Now, we also have the histogram. The histogram does not matter for right now for what we're talking about. What matters is what's separating the green from the red. This zero line. This zero line right here. The zero line is what matters. And the recording is available, so I'll send the recording out after this is up. The zero line is what matters. So you want to look at the relationship between the moving averages and the zero line. The moving averages and the zero line. Okay, so forget the histogram for now. I'll even take it off the screen so I don't confuse anybody. The moving averages is what we want to pay attention to. And in this case, above the zero line lets us know that we have bullish momentum. Below the zero line lets us know if we have bearish momentum. Okay? And then what the moving average is saying is what is actually happening at the time. What's currently happening? Is it buying or selling? So what I had us do is I had us go through and I had us look at that coming into our trade setup to give us data. Okay? Now, let's just take a look at it really quick. 5 minute is on a buy and it has buy momentum. It's above the zero line. Okay? 15 minute was on a buy and it had buy momentum. The 30 minute was on a buy, blue above orange, and it had buying momentum. The 1 hour was on a buy and it had buying momentum. The 4 hour was on a buy and it had buying momentum. The daily is on a buy and it has buying momentum. Who thinks selling is a good idea? Selling is a terrible idea when you have all of those time frames coming together and saying we have buying momentum. Okay? So the way that I would walk out of that scenario is I would say, okay, where is my buy opportunity coming from? Where do buy opportunities come from? Well, one of the best places they come from is from demand zones. So I see a demand zone right here. I see a demand zone right here. Okay, check the 15 minute and see what you see. There's a zone down here, right? You got this bullish. So there's a buy that I'm going to be looking for to happen for this move. I'm not going to sell this, not with all that information, especially with the 5 minute being above the zero line. If the 5 minute gets below the zero line, then that means there's a break of structure. MACD is showing us breaks of structure, okay? That's one of the big things that you want to understand. The MACD also shows us break of structure. So in my opinion, I'm just waiting for the market to pull back enough for me to get in for my buy, okay? It's too much buying momentum. So as we play it out, we're waiting, we're waiting, we're waiting. Look at the MACD. It crossed down for the buy, for the sell. That's fine with me. I'm not looking for a sell. I'm looking for a buy. Where I could potentially get that buy? Uh-oh. Now it's in my zone. Okay. This is an area that it could potentially buy. Let's see if it holds the zone. It's holding the zone. Okay, the market went into the zone and closed out of the zone. This could be your entry now. Once you get, if you're just doing candlesticks, right? Price action. We went into the demand zone and then we closed out of the demand zone. This could be your entry right here. Or we have optimal reversal. So then what will we wait for? We just wait to get that vortex cross and start the whole process. right? Wait to get that vortex cross. There's the vortex cross. So you could have entered off the price action there or the vortex cross with the other upper reversal stuff right in there. Either way, this looks like a better idea for the buy than to be getting in for the sell. I had too much data on my side that said I need to be buying. We never broke the zero line. So that's not a change of structure, not a change of momentum. And so now we're in the buy and we're looking to make money. Okay. I want you guys to do the homework, the homework, the homework. There's 95 pips in that move. Just to this move, there's 44 pips in that move. Right? Can you deal with 44 pips? I can. Why can I deal with 44 pips? Well, if I have a 10 pip stop loss, that's risking 2%. What does that mean for my take profits? Well, every 10 pips represents 2%. So if I go and get 10 pips, then I've made 2%. If I get 20 pips, then I made 4%. If I go get 30 pips, I made 6%. And if I can go get 40 pips, I made 8%. I could deal with that. 8% by just being patient and waiting for the move. Okay? Any questions? Is this helpful? I want you guys to really dial in and look for those supply and demand levels. I know most people got the crosses. You got the regular support and resistance levels. But I'm telling you, the most important areas are those supply and demand areas. Let me know if this is helping or helpful.
Could you go over the MACD stuff again, the buy and the buy? You know, the buy or the sell and all that kind of stuff.
Yep. So what I've been doing is I've been charting here. Okay. And inside of here, I've been tracking momentum. Okay. I've been tracking the momentum. So like here it says buy and then it says sell momentum. The first part, when we say buy or we say sell, that has to do with the positioning of our moving averages. If we are below our moving average, we have this blue cross below the orange. That is what a sell looks like. If we have our blue cross above the orange, that is what a buy looks like. So when I'm saying track the MACD, go through the time frames before we get into the session to kind of give you guidance. Go through that and look at it and see what's happening. So that first part of that, when we say buy, so let's just say right here, right? It just crossed down. Well, that means it's selling. So that's a sell. But then the next question is, what is its relationship, the moving average relationship to the zero line? The zero line is where my momentum is. It's a standard MACD, no adjustments. The 0 line is where my momentum is. It's letting me know the momentum of the market. It's like market structure as well. But right here, I can see that even though it's currently on a sell, that it has bullish momentum. So I would put sell, but it has buy momentum. So when I'm going through the time frames, let's go back over here again. I'm paying attention to what's happening. Right here, it's on a buy, and it has buying momentum because it's above the 0 line. Then when I go to the 15-minute, it's also buying, moving average crossed up, and it has buying momentum. It's above the 0 line, right? And we went all the way down the line, and we saw that all the time frames, blue above orange, is buying, but it has buying momentum. So with all that data, it would be foolish of us to try to take a sell. It makes no sense. And also, to take the first sell, you want to see this 5-minute get below the 0 line. Why? Because if it gets below the 0 line, that's letting us know that there's a structural break. Okay? There is a market structure break because this goes hand in hand with what's happening with the candlesticks. Take a look at this right here. What were you about to say, Robert?
I was just asking Cielo. So I haven't been doing a lot of the homework, but the few times that I have done it, you know, the time frames are they're different, right? Some are buy, some are sell. You know, like this one, I guess like almost all of them are in the buy. So what happens when they're not all aligned like that? Do we not?
Yep. So look at this chart. So this is kind of what you're talking about.
Mm-hmm.
Okay?
Mm-hmm, right.
So let's take a look at this. Let's look up here first. So 5-minute is buying, but it has sell momentum. 15-minute is selling, but it has sell momentum. 30-minute sell momentum, and so on. So there's a difference here, but what's consistent about this is all of the sell momentum. And what happened on this? It's sold, right? So this one is kind of easy because it's already, it's like, it's a no-brainer. Just like that other gold trade, that's the no-brainer. So those are going to be the easier ones. Now, let's look at one that's a little bit more mixed. We got sell momentum, sell momentum, sell, right? We have sell, we have buy momentum, we have buy momentum, we have buy, sell momentum, and we have sell momentum. So this is a little bit more mixed review, okay?
Mm-hmm.
Now, looking at this, I don't have exactly the data, but I would want to see, right? I would want to see where, so it currently says sell momentum. 30-minute actually has buy momentum and the 1 hour. So these two higher time frames, the 1 and the 30, are actually on buys as far as the momentum. So that lets me know that these lower time frames, right, that this may just be a pullback somewhere. So when I look at this, I can see here that overall, this thing was on a sell. But it ended up pulling back, which is what happened on the buy. The buy, it was setting up basically a pullback. So it pulled back. So from all my testing, I figured out what's happening on the 5 minute is very relevant, and what's happening on the 15 minute is very relevant. Now, and then of course the 30 minute and the hour. Those are the key ones you want to lock into. But it's going to be the combination of understanding what's happening with the market structure. So you got a chart, and then look at what data did the MACD tell. So it's a little bit hard because I can't go through the example, but let's go to a different day for gold. Because it's easier when you can actually go through the steps. So here, we'll just do the day before. So here, and it's only gonna be through the charting and the work that you're gonna start to kind of be able to see how to play. Like it's almost like I personally, it's more of an art than an actual science at this moment, at least for me. There's probably something there more scientific, but for me, it's more of I have to kind of look at it together with what's happening with the structure. So, because I can't say do whatever the 15 minute says. It just doesn't work like that. It's not that. It's the combination of them. So let's cut this off too. All right, so here we are. Okay, so we have our zone. And what do we see here? Well, we see that we're below the zero, right? And we're buying currently. We're below the zero and we're buying currently, but it is a fresh cross and it is a fresh zero. So what did I just tell you about the zero line? I said that it's market structure, right? So there was a break of market structure. Well, what structure was broken? This pretty much right here. Okay, this area pretty much is what happened. The market broke right in here. Okay, so it broke out of that. So now here's the thing. If I'm interpreting the MACD is telling me that there's momentum to the sell side, and it was a fresh break. So if I'm gonna approach this looking for my trade opportunity, I first need to know I'm at least not buying unless I get back above this zone. Okay, hopefully that part makes sense. I need to get back above structure. I need to see this MACD come back above before I actually get into this, because it just showed me it broke. That's the first thing I would take away from looking at that. The next thing I would see is on this 15 minute, there was a structural break, okay? So we broke up above and we've been up above. Well, where did the break potentially happen? It happened in here, right? It happened right in here. This area we broke out of, right, with that candle, and now we're up above. So when I'm looking at this, I see we broke down, we broke up, and we came back to the level. So this is potentially a retest. Okay, so I have a fresh 5 minute cross, but on a 15 minute, I have a buy. Okay, so I got buying momentum, but I currently also have selling is selling because the blue is under the orange. I go to my 30-minute and I can see this. I'm currently on a buy, but I also have selling momentum. So I'm not really going to go anywhere high unless I break. So there's a lot of, these things are all kind of saying the same thing. Structurally, it's either going to go up if it breaks out of this area, or it's going to go down if it breaks out of this area. That's all that's really that those time frames just told me. So currently buying, but we have sell momentum. Currently selling, but we have buy momentum. Currently selling, but we have buy momentum. And currently buying, and we have buy momentum. Okay, so a lot of buy momentum was what I got from that. So now for my sales, I would need to see this cross down and continue down. So we would need to break this. And we also would need to break back below this 0 line on the 15. If not, based upon all that buy momentum, this has the potential to go up. So it's more of a looking at market structure in relation to this and putting it all together. But it's gonna take time. It's like, it's not something you can do in 25 minutes on this call. You gotta look at it together with what you know about market structure and the chart. But then from here, you hold on to those keys that I'm saying, which is utilize the 0 line to reveal to you the market structure that's in the candles and kind of give you a guide for your testing. So now, as we're trading this out, we'll press play. Blue is above orange. We broke that level that we were talking about. Look how it's coming back above the area. A lot of consolidation. Took people's money on that stop loss. Just kind of hanging around the 0 line. You see there's not a lot of momentum up, but overall, it was a buy. Okay, and on the 15-minute, you could see 15-minute had all that buying momentum as well. 30-minute, we talked about that earlier. We were looking to see if this thing would break up above, and it did. So that's my point. It's kind of looking at them all together, right? I know it could be a little bit confusing, but I'm telling you guys, if you do the work with your charting, it's going to start to make a lot of sense. You're going to see the patterns. So after I kind of chart, I pay attention to the 5 and the 15-minute. After we do that, I'm paying attention to what they're doing. Because if they're not breaking those levels that we had already identified, then we never got that candle to close below here. We had already marked that off based upon what we saw in the MACD. So we're bullish. So just stay on the buy side. Hopefully that helps. Did that help or confuse more? And it's okay if you got more confused.
It was a little better. Yeah, like I have to do more of the homework, but I see how it played out. So that was kind of interesting. I don't know if I would have held on through all that consolidation. That was like a couple hours, right?
Correct. However, that's my my hope is that once you start to really understand what it's doing,
yeah,
it causes you to just chill out. Because that's what it did for me. or it causes you to stay engaged and wait for your opportunity.
Yeah.
Because maybe you got out here, right, at the top of the A range, right? So I don't know how you played it, but maybe you got that 11 pips, right? Stop loss below that level.
And I'm also looking at the hours, like, you know, like I think the breakout happened like middle of the night for us, like 3 o'clock or something. So like, wow.
Yep, correct. So for us, most likely we only got that 11 pips. It was a very tight range for the Underground Railroad section, but it makes sense. It was New Year's.
Yeah.
So that's fine. But what it ended up doing though overall is it held. And I mean, if you happen to stay in that trade, your life changed.
This has really been working for me, Chuck. Like I said, I had not been putting it on the electronic file. I've been doing it on paper. And, you know, because I'm not going to be watching it in the middle of the night. I do just set my take profit, my stop loss, and it's been working really well. And I found a couple of times that my eyes will get my emotions, and that's when things tend to go south for me, instead of like really following the data, following what the momentum is saying, you know, versus what is currently happening. So I'm definitely learning, you know, how to trust the momentum based on how you've taught us to, you know, go to the different time frames to see what exactly is going on. And this is exactly why, unfortunately, I've been looking at Underground Railroad kind of like as a stepchild, because this to me was, you know, has just been simpler.
Oh yeah. Well, so this is a trade setup. So let's not forget, I said it earlier, Underground Railroad is a trade setup, right? Optimum reversal is an entry qualifier, right? It's not, optimum reversal is not giving us a trade idea, right? It's not, we have to apply optimum reversal to a trade idea, like Underground Railroad, like harmonic scanner, like any of those things. So let me just pull this up one more time. Remember our system, right? We talked about our system. Our system is, we want to see that our moving averages are in our favor. So all the way over here already, I'm cautious about taking a sell because of what's happening on the moving average. Hold on one second. I'm cautious to what's happening for the sell. If I have my optimal reversal, right? If optimal reversal's up, I mean, we're optimal reversal 4 is above the 20. We're on the buy side. We're looking for buys, not for sells, right? We're just looking for buys because it's showing a buy. Now let's look at this. So you know what the moving average data. See you later, Odette. Have a good day. You know what the moving average data is saying, right? With the MACD. Now look at your moving average. This is 30-minute moving average. We lost fast. We don't have fast anymore. But just think about this. The MACD told us all that bullish momentum, correct? MACD told us all that bullish momentum. Well, what's the moving average say on the 30-minute? We're on a buy as well.
Also bullish.
Right? So what's our 1 hour saying? All right, coming out of that, we just crossed up. We're also coming into bullish. So the 30-minute gave us more data there because it took a little bit longer. But let's look at the 4 hour. I mean, the 4 hour is for sure on a buy, right? And then the daily's on a buy too. So we got all those components in place to really help direct our thinking, right? On what's happening. So I mean, I got all that. Everything's telling me. Currency strength is telling me that this thing is bullish, right? Right here, bullish. So I just gotta use the tools that I have in place with my charting to keep me from being emotional and just relax. Just wait for your trade setup. Wait till you feel like you have the confirmations that you need to see in place and go from there. Right? 4 above the 20, 30-minute time frame. We got our vortex cross in here a little later, but if you were still on, right? So I probably wouldn't have caught that one. An Underground Railroad would have been done. To tell you the truth, just this trade, it would have been probably here, you would have got out. And if you hung around for the breakout, then you would have been fine. It's just a tight market. There's that's just what that was, is holiday. But it's the same rules that would apply, right? Even in a tight market, there was money, just less of it. Any other questions? Good to see you, Paul. Glad you could make it. It was good to have you on the call the other night, too. Any other questions or comments? I want you guys to do the homework. Everybody have the Airtable. I know you're doing it on paper, but that's for the current trading. For your back testing, put it on paper, because one, you could share the data with the group easier, and it's
not just that, Chuck, to share with the group, but I'm seeing how, having all the data across the board, it just even for us personally, when we're doing it, I noticed that the little color changes too. So, visual, it's just, it's amazing.
Yeah. And you have the chart, because you got to save the chart too, right? You got to save the chart so you can see it. See what happens. So check this one out. This was 5 minute. Look at all that sell momentum. 5 minute to the 15 to the 30, right? It's just a ton of sell momentum. 5 minute was currently on a buy, right? But it had sell momentum. So what does that mean? I hope you guys are getting this. I'm gonna keep trying at it. You guys are my family. I'm trying to figure out this. This is a little. It's more of an art, so it's kind of hard to explain. But this part, I want you guys to think about this. You got the break. Can you guys see my magnifying glass move around in my mouse?
Yes.
Okay. You got the break of this structure. The zero line got broken. Well, look up here. What got broken? Right here. So that was the break of structure. It came underneath that. So what usually happens with break of structure? There's going to be a retest. That retest came right here. So 5 minute being on a buy doesn't necessarily tell me I'm going to be buying. When I have sell momentum on all this, this is probably just a retest. This is what I'm trying to say. This is just a pullback. It pulled back to the zero line, just like it pulled back to the structure. And then it crossed down, broke our red trend line. There's our sell. There's our Underground Railroad trade. right there. Does that make sense?
Yes.
If it doesn't, I can say it again.
No, this makes sense, Chuck. And for me, you know, even drawing up the Underground Railroad, because, you know, I'm just not fast enough yet to be comfortable with catching, you know, 7 pips or 10 pips. I do, you know, I do this and then just wait for my entry for what the momentum, the data for the momentum is saying, rather than, you know, the initial fake out.
Yep. And where did this stop at? Remember, I'm gonna, for the rest of the year, drive home engulfing candles. I want your eye to just see it again. I want your toes to start wiggling when you see engulfing candles. I just want you to get happy, excited, because the market is gonna draw itself to these engulfing candles. So when we took this sell down, where could my target have been? Right in this demand zone. And that's exactly what happened. It came down. So I made my Underground Railroad money, and then I was ready for the buy, right? Ready for the buy, because it came right into that demand zone. And then there was the next trade. So that was another, probably, if that was 20 pips, then it's probably another 20. So about 40 pip move back to the upside. Right, all before 12, right? The idea is what happens before 12. We don't care what happens afterwards. That's not Underground Railroad. That's something else. But what happens before 12 is going to be Underground Railroad. Okay? And that's where you got to get in. I'll pull one more chart up. So we went here, and Airtable. So I'm on the 32. So what do we have? We have buy momentum. We have buy, sell momentum, right? We had 30-minute buy, sell momentum, sell, sell with buy momentum, and more of a neutral. So knowing this momentum is on the sell side, but it's currently buying, right? So let's look at that. Momentum's on the sell side, but it's currently buying. What are we looking for, right? We're looking for the pullback to structure. And that's what happened. It pulled back to structure. It broke up, not a problem, but it didn't break our area. It didn't break our level. It comes up, there's that sell, break there. We already know we had sell momentum. Enter the trade, stop loss above the high, call it a day. I'm telling you guys, if you do the homework over and over and over again, it is going to be so beneficial. I'm challenging you guys. More important than how much money you make over the next couple of days is how many charts you're able to mark up. Mark up the charts. I want you guys to have confidence that it works or confidence that it does not work. It's the only thing I care about. Cool. Anything?
Yep. I have a question. Is there a special spreadsheet that you shared with the group to track these trades?
Yes, that Airtable that I keep pulling up. So what's your email?
I'll text it to you if that's okay. Or okay, I can do it right now. DAM. CKOY.
C as in
Charlie.
DK.
Yeah, Day McCoy. DAMCKOY. The number 6. At gmail.com.
All right.
Thank you, Chuck.
Yep, I got you. So what's gonna happen is in here, you're gonna get the email, and it's gonna ask you to set up an account. It's a free account. Once you get the email, so I sent the invite to you. Once you get the email, it's gonna take you, and it's gonna show up here, it's gonna say basis shared with me. And you're gonna have Underground Railroad. What you wanna do is you wanna right click on it, not regular click. Right click on it, and you wanna click duplicate base.
Okay.
And when you duplicate that base, duplicate the records and the comments, and duplicate the base. And then it's gonna show up now down here in your workspace.
Okay.
And then
Okay.
from there, you can add things. So like me and Troy created yesterday, I don't have his, but on his, we added for the journal. So this is the back testing, but let's say we turn this one into a journal as well, right? So what I could do is, right, I could have this journal, and what we added was, we added in lot size, right? What lot size did I use? Okay, for the trade, we added, so we got pips gain. We added in, Troy, you remember the things we added in? Or maybe you have it up, you can pull it up. I know we added psychology. So how we were feeling, like our psychology in the trade, like being able to talk about that.
Hey Chuck, I want to make sure I'm part of that as well.
What'd you say, Troy?
This is Paul.
Oh, Paul. Sorry.
Yeah, I want to make sure.
What's happening with my? All right, talk to me, brother.
No, I want to make sure that I'm part of this as well. This is new for me as well.
Oh, I got you. I turned up my. This is. All right, so you need this too. Let me go back. Underground.
I'm on my phone right now, so I won't be able to do it.
No worries. What was the email?
Let's just do my name, Paul McClure. (091184) @gmail.com.
MCCLURE.
Correct.
091184 @gmail. All right, cool. Anybody else need this? I know, I already know Fred's gonna need it.
This is the bomb. Thank you.
No problem. Alicia, you could send it to your sister. You could share it with her.
Yes, I can.
Let me see. I think everybody else is straight. I'm telling you guys, do the homework. I plan to hold me accountable. I plan to have this filled up to 30 charts by Monday. So feel free to check in with me and ask me how my chart is going.
Oh, and this is for back testing clearly, right?
This is, however, this is what I was saying. I created one with Troy yesterday that we just added a couple things for the current. So what was I saying right here? So rename this to journal.
Right, that's what I was kind of looking more to doing it. I tried to do it, but for some reason, you know, this platform is really new to me, so I was trying to figure out how to add the fields. But I just saw you do something copy, and all the fields showed up. I wasn't able to figure that out, so that's why I've just been doing it on paper. And for me, it's been more of journaling than the back testing, which I will start.
Mm-hmm. Yeah, you want to start the back testing. The journaling is good. Like, you want to keep journaling, but the back testing is going to give you confidence, not the current journaling, because you can speed up your experience by back testing. That's the power of back testing. It's experience that makes us better traders. But if we haven't been trading long enough, or we got to wait for the next day, then it's harder to increase that experience level. The way you do that is through back testing. So right here, all I'm doing is at the top, I'm just right clicking on it, and I can do duplicate table. And when I duplicate it, I can take it with the records, or I can just duplicate the table. So it spit it out here as being blank. So the things I was saying I added with Troy was, we added what lot size we used. We added our psychology, like how we were feeling in the trade, like what we were thinking about, maybe, you know, stress today, argument with the homie, like whatever, you know, thinking about other things, like just you could tell on yourself in that. Your psychology, how you felt, did you get emotional with so you can do all that in there. We did, it was, shoot, I need him to send it to me. I should have created for my own self. I created for him. We had,
maybe he can show us on tomorrow night, you know, for Trade House, which other ones he added. That'll be cool.
Yeah, I'll ask him, because I for sure want to have it myself. But yeah, and anything you personally want to add, just go over here. This is really cool. You can add a field, you could label it, and there's different options, right? You got multiple select. That's kind of what we have for the daily and hour for that stuff. You can go through these different things, percentages. I mean, it's basically kind of, it's a spreadsheet. It's like, has Excel type functions in some cases too. So you can get really fancy with it. I just, you know, add whatever you feel like you want to also take a journal of, and kind of go from there. But yeah, you guys, do the homework, chart it up. Make sure when you do the chart, that your chart is clean, right? That is like, most people should be able to come onto it and interpret it, right? That's my entry, that's my stop loss. That is the take profit, right? And this is maximum pips. So you just want to see what the maximum pip count is. If you want to track like where you would have put your take profit, that's fine. I think that was something that we did, like what you would have got in the trade versus like what it potentially gave. But you want to for sure collect the potential pips there, because that's just important to know what our setup produced. Okay. And then, yeah, just go through it and, you know, do the work. Show yourself, you know, show yourself that it works is the important thing. But that's it, man. You guys are troopers. I'm excited. 2020 is going to be big. I see no reason that every single person on this call cannot be free by the close of this year. There's nothing like, we have it in front of us. It's just now just coming in, doing the work.
Yeah, so for everyone that's on the call, Right now, this is Estella speaking, and I'm going to say this. Y'all are going to be my witnesses. I am firing, my 9 to 5 at the beginning of the fourth quarter of this year. So hold me to that, y'all. Ask me how things are going.
Yeah,
Awesome.
you got this.
Yeah.
You got this. Cool. But yeah, you guys, let's do it. I'm challenging you guys to do the homework. Do the homework. I created the strategy, and the confidence that I have now after doing the homework is on a whole nother level. Like, I believe in it more than I have ever believed in it. And I want you guys to either believe in it or doubt it, but no in-betweens. No in-betweens. I want you to be, it does not work, Chuck. And that is fine with me. I want you to be like, it works. But no in-betweens, no question marks. And if you got question marks, it's because you're not doing the homework. Everybody cool on that?
Yep.
I'm cool. I'm just super
Cool.
excited for 2020.
What'd you say?
I said I'm super excited for 2020.
Yep. Hey, Troy, you're there, man. I need that chart. Can you pull your chart up and tell me what the Airtable, unless you're not at a computer? That's fine. I was trying to put it in the recording. Are you at your computer, Troy? Your journal that we created for you last night, I just want those additional tabs for the recording, what we put there. Yep. I'll text everybody this training once we're done.
I can't share the screen.
I got you. I think it's the underground right there to the left, right next to your goal. Okay, perfect. So what we put, roll over to the left, Troy, sorry. Okay, so psychology and notes. So psychology is what we added there. So scroll over to the other side, please. So we added, that was the dollar amount. So what we made on the trade, profit and lesson, right? Profit and lesson was a column that we added, and we added a news column. Okay, is there news happening? So we added lot size, profit and lesson, news, and psychology. And then you can add whatever else you feel like you need, but that was for the journaling. All right, so that's cool. All right, you guys, thank you, Troy, for that. Man, let's get it, you guys, let's get it. Let's support each other, hold each other accountable. You hear anyone on the call saying that they're hoping, let's be like, hey, why are you hoping, right? What's happening with the trade? Is there a reason you got in the trade? Is everything there? Yeah, all four options: small loss, break even, small win, large win. That's our goal. No blown accounts, no none of that. We're gonna be disciplined this year and really go hit our targets. What was I gonna say? You guys are recording, not a problem. Anything else you guys need from me?
Nothing now, man. Thank you. I'll see you tomorrow night.
See you tomorrow. Have a beautiful day.
Cool. Talk to you guys later. Blessings, blessings, blessings. Everyone, have a good day.
Bye.
Yeah, thank you. Take care.
All right, Paul.